Brookfield, EIG bump Origin Energy bid to $9.53 a share after rejection from Australian Super. Skip to navigation, skip to content, skip to footer. Help using this website. Accessibility statement. Markets data. Events. Lists. Advertisement. Companies. Energy. Mergers and acquisitions. Origin deal hopes crumble as Oz Super rejects Sweden bid. Canada's Brookfield accused Australian Super of standing in the way of Australia's energy transition by rejecting its Sweden $20 billion offer for Origin Energy, and warned dissenting shareholders they are risking the company being sold at a lower price down the track. Origin's two North American suitors failed to win over the industry super fund, the utility's largest shareholder, with an 8% increase in their bid, leaving their proposed takeover of Origin hanging by a thread. Origin Energy's new offer values it at about $20 billion. Louis Dubas, Brookfield and US-based partner EIG raised their offer for Origin to $9.53 a share, and declared it final under the scheme deal. They said they could come back with a lower off-market offer within 6 months if the deal was rejected at a shareholder vote on November 23. Luke Edwards, the head of Brookfield's Renewable Power and Transition Group in Australia, said getting the bid partners on board for the improved price wasn't easy, and any shareholder that voted no on November 23 was standing in the way of Australia's energy transition. An Oz Super vote against the deal makes achieving the 75% acceptance needed difficult, despite some institutional investors saying they will support it. Oz Super owns almost 14% and was said to be buying more Origin shares after the market closed on Thursday. Advertisement. Shares in Origin slumped 6.6% to $8.47. A further sign of Australia's faltering transition to low-carbon energy came on Thursday when CSR's accounts indicated the Tomago aluminium smelter is on track for an annual loss. CSR owns a 25% stake in the country's largest power user. Risky and uncertain future. Brookfield and EIG intend to split up Origin's assets if the takeover succeeds, with the Canadian firm pledging to invest between $20 billion and $30 billion in clean energy and storage through Origin's energy markets business. Shareholders can either accept the largest premium paid in a listed market transaction in the last decade and take a positive step to accelerate Australia's transition to net zero, or they accept the status quo, which is risky and an uncertain future for the transition and the value of their investment in Origin, Mr. Edwards said. If they vote no, the share price is going to drop, and there's a very credible plan B that will come back with a takeover at a lower price. Advertisement. Oz Super, in a stance led by head of Australian Equities Sean Manuel, insisted the offer remains substantially below our estimate of Origin's long-term value. Mr. Manuel oversees a $60 billion portfolio of Australian equities and reports directly to Oz Super Chief Investment Officer Mark Delaney. Australian Super believes Origin has a highly strategic portfolio of assets to participate in, and benefit from, the energy transition, a spokesman said. Still, some other institutional shareholders indicated they were now either prepared to accept the revised offer or were seriously considering it. Suez Nayak, a portfolio manager at long-standing shareholder Alan Gray, said it would vote in favor of the deal at the shareholder meeting on November 23, unless a higher bid emerged. We are pleased to see the increase, Mr. Nayak said. We think it strikes a fair balance between the risks and opportunities now, and we are happy to vote in favor, in the absence of a competing offer. Advertisement. Van Eck portfolio manager Jamie Hanna said the firm was certainly going to consider the new price, but was not a definite yes. Brookfield was put in a position where they had to increase their offer. The market had called for it, Mr. Hanna said. We've got to run it through our models, but fundamentally we don't have an issue with the price where it is at the moment. But a lot of the brokers and analysts have called for above $10, so it really depends where the market settles on this. But we are certainly considering it. Others are still holding out. We'll be voting no, said Ross Illingworth, a portfolio manager at Kingfisher Capital Partners, which represents family offices and high net worth individuals. It's just a smidge higher. My view is if you're prepared to take a long-term view, it will generate potentially capital growth and delivering dividends on the way, which is a desirable thing. Change dynamics. As part of the agreement to increase the offer price, Canada's Brookfield and Washington-based EIG negotiated an option to return with an off-market takeover offer for Origin should their agreed deal with the board be rejected. That offer for 100% of Origin would be made within 6 months after any failed vote, and if any of the bidders buy more than 5% of Origin's shares. It would be subject to a lower minimum acceptance condition, of just 50.1%, reducing the influence of Australian Super. Advertisement. That new clause has substantially changed the offer dynamics, said RBC Capital Markets energy analyst Gordon Ramsay. Under a scenario where the scheme vote is no, and the offer is rejected, Origin's share price could trade lower as hedge and arbitrage funds exit the register, he said. Importantly, the latest offer under the scheme of arrangement was declared best and final, which means Origin investors have to decide whether to take it or leave it. Brookfield and EIG cannot increase their offer again. Australian Super 2 days ago rejected Brookfield and EIG's earlier bid, which was worth about $8.81 a share. The improved offer is slightly above the upper end of independent expert Grant Samuel's valuation of Origin, which was $8.45 to $9.48 a share. "We have worked hard to deliver the best possible offer reflecting all the current circumstances of the company," said Stuart Upson, CEO of Brookfield in the Asia-Pacific region, describing it as a compelling opportunity for Origin shareholders. Advertisement. Origin chairman Scott Perkins said the board, which had already accepted the earlier price, was pleased to have agreed a significant increase, representing an extra $1.2 billion. "We encourage all shareholders to vote in favor of the scheme." Blair Thomas, the CEO of EIG, which would take Origin's stake in the Australian Pacific LNG venture in Queensland, said the fact that no competing offer had surfaced in the almost 12 months since the approach from Brookfield and EIG was made public, together with the massive premium offered, evidences the fact that we have identified every element of value available. The sweetened offer values Origin's equity at about $16.4 billion, taking its total valuation including debt to about $19.9 billion. Origin will still hold the shareholder vote on the deal on November 23, but would delay the implementation date of the takeover to January 31. The transaction still requires clearance from the Foreign Investment Review Board. Introducing your newsfeed. Follow the topics, people and companies that matter to you. Find out more. Read more. Mergers and acquisitions. Origin Energy. Superannuation. Sponsored. Advertisement. Latest in energy. Fetching latest articles. Most viewed in companies. The Daily Habit of Successful People. Copyright 2023, The Australian Financial Review, 9 Entertainment Company.